Today I'm going to share with you 36 quick-fire nuggets of information that I wish I knew about Bitcoin before buying my first coins. Now for context, I've been investing for over 11 years in stocks, dabbled in crypto for about 4, and over the last 3 years I've become a full-on Bitcoin maxi, now working full-time in the industry. I've experienced the highs and the crushing lows, even losing it all and having to start again from scratch. Now I'm giving you the cheat sheet so you can learn what has taken me years and hopefully avoid every mistake that I have. But before we dive into it, this video is intended for information and entertainment purposes only. It should not be considered financial advice. Any reference to financial products, investments or services are general opinions and are not tailored to your personal circumstances. When investing, your capital is at risk and you may lose some or all of your investment. Past performance does not guarantee future results, so please always do your own research. But with all that out of the way, let's get into it. Kicking off with number 1. Bitcoin isn't just an investment opportunity, it is money. To truly get Bitcoin, you first need to understand what money actually is. So money is an intermediary tool for exchanging goods and services. And a successful money needs to have a few key properties: scarcity, resistance to manipulation, verifiability, durability, and portability. Gold was the most successful money to date. For thousands of years, it worked because it was scarce and durable, but it was heavy and hard to move. And this is what led to the creation of paper money that represented gold held in vaults, known as the gold standard. The money that we use today is called fiat, and it has none of these key properties. And this has been the case since 1971, when we abandoned the gold standard for good. This government issued fiat currency that we use today has no real value and is backed by nothing. Fiat money has no limit. Governments control it and they can print new currency units whenever they like, devaluing your money through inflation. Why do they do this? Well, simply because they can. And many of the world's biggest problems actually track back to our broken monetary system where governments control the currency. To deep dive into that, I'll leave a link down below to my friend Joe Bryan's video called What's the Problem?, which goes over everything in a way that's easy to digest. Bitcoin was designed to be the ultimate form of money. It's truly scarce, with only 21 million coins. It's divisible, transportable, verifiable, durable, and censorship resistant, with no person or group able to manipulate it. Bitcoin's price goes up forever in fiat terms, because Bitcoin is scarce and fiat is not. Its price, when measured in a fiat currency that's constantly expanding, will theoretically go up forever. So when someone says Bitcoin's going to $1 million or $10 million per coin, it's not actually as crazy as it sounds. No one can censor Bitcoin. It's peer-to-peer digital money. No middleman, no bank needed. As long as you have the funds and you follow the rules, your transaction will work, and no one can stop it. Decentralization is the key to its success. No one is in charge of Bitcoin. It can't be stopped and it can't be banned. Its distributed ledger means that all transactions are visible on the blockchain. The network's run by independent nodes, which you can run for free, and any changes require consensus across the entire network. Because of this, your voting power isn't tied to how much Bitcoin you own, so large holders don't have more of a say than you do. Bitcoin mining is just verifying transactions. It might sound complicated, but it is literally just this process. Miners are paid for doing this, and crucially, it requires physical energy in the form of computing power, known as proof of work. Proof of work is what makes Bitcoin special. Without proof of work and true decentralization, a blockchain is just an inefficient database. Proof of work requires real-world energy, making Bitcoin incredibly costly to manipulate or attack. Therefore, every coin literally represents real energy costs. The Bitcoin issuance is all predetermined. New coins are issued to miners for every successful block that they mine, and this is known as the block reward. The block reward started off as 50 Bitcoin when Bitcoin first launched, and roughly every 4 years, this reward gets cut in half, meaning that Bitcoin becomes more scarce over time. Sending Bitcoin directly on the main chain is actually quite slow. Each block takes roughly 10 minutes to mine thanks to Bitcoin's difficulty adjustment, ensuring security and preventing double spends. So this is perfect and secure for large transactions, but it's quite inefficient for smaller payments. But you can send Bitcoin instantly using Lightning. The Lightning Network is a Layer 2 solution built on Bitcoin, making smaller transactions fast and cheap. For everyday use, Lightning is your go-to. You don't need to understand all of the technology to appreciate Bitcoin. It has proven itself incredibly resilient over the last 16 years. It's never dropped out, no double spends, and no hacks. That is truly remarkable. This resilience aligns with the Lindy effect, which is the idea that the longer something survives, the higher its chances are of having long-term success. Bitcoin is not a get-rich-quick scheme. The days of 10x returns in weeks are largely over. But that doesn't mean we're not still incredibly early. As there are only 21 million Bitcoin and 8 billion people in the world, even a small holding today could make you a very wealthy person in the future if adoption continues on its current trajectory. It just demands patience, conviction, and the ability to handle 80% dips with a smile. We really are so early. Bitcoin is only a $2 trillion asset, which is a similar size to a single big tech company. But remember, Bitcoin's an entire monetary network. So when compared to gold, which has a market cap of $22 trillion, or fiat money, which is over $120 trillion, there really is so much room for growth. Early adopters deserve their returns. They had conviction when Bitcoin was far riskier and unproven, dealing with sketchy exchanges and custody solutions. Holding Bitcoin in those days was not easy, and they truly earned it. Buying Bitcoin is now super easy. Exchanges have come such a long way, making it so easy to buy and sell Bitcoin. Personally, I mainly use Strike for speed and ease of use, Kraken for low fees, and eToro for when I want to buy Bitcoin and stocks all in one place. So eToro is a multi-asset platform authorized and regulated by the Financial Conduct Authority. So you can buy stocks, ETFs, and crypto all in the same place. They offer investment ISAs as well, allowing you to make tax-free gains on your stock market investments. So if you want to give them a try, I'll leave my link down below in the description where you can check them out and at the same time help support my channel. Next up, secure custody is a must. Remember, not your keys, not your coins. Leaving Bitcoin on exchanges carries huge risks, from hacks, freezes, bankruptcy, just like what happened with FTX, which is how I lost everything and had to start again. You need to consider self-custody and cold storage hardware wallets. But luckily there are so many options out there with the Cold Card, Trezor, Tangent, Ledger, and so on. Protect your private key. Often this is backed up with what's called a seed phrase, which is usually a string of 12 words that are randomly generated. If you lose this, your Bitcoin is gone forever. It's therefore essential to find a solution that works for you that you'll be able to manage securely. Now, one wallet that I've just started using is called Tangent. And the coolest part about it is that it doesn't require a seed phrase. Instead, you get multiple cards or a ring that securely store your private key. And then to confirm a transaction, you simply tap one of these on the back of your phone. It's super simple, and the great thing is you can hide these in plain sight, unlike a seed phrase. I've also partnered with Tangent, so if you'd like to try them out, you can use my referral code, GLASSE at checkout, or use the link down below in the description for 10% off all orders. I'll be doing a full review very soon, but so far I'm really loving how easy and convenient it is. Protect your privacy. Never reveal your holdings, your seed phrase, your private keys, your wallet addresses, or even how you custody your coins. This makes you a target. Use privacy tools like VPNs and be incredibly careful who you share information with. In Bitcoin, no one's going to bail you out if you're careless about your security. Bitcoin is a taxable asset here in the UK, so it's best to be aware of this from the start and track your cost basis to manage your capital gains tax. You only get a £3,000 annual capital gains tax allowance, so make sure you stay on top of it. You can get tax-free Bitcoin exposure here in the UK. Bitcoin itself isn't available to purchase within ISAs or SIPs, but you can buy shares in Bitcoin treasury companies like Strategy, formerly known as MicroStrategy, for tax-efficient exposure. Because they have a large treasury of Bitcoin, they can act as a decent proxy. There are even Bitcoin ETNs coming soon to the UK as well, and hopefully Bitcoin ETFs are on the horizon. Non-KYC Bitcoin is a thing. You don't have to buy Bitcoin through exchanges that collect all of your personal data and are regulated in the UK. You can instead use alternatives like buying Bitcoin peer-to-peer in exchange for cash, but also non-KYC exchanges exist. This doesn't make you a criminal for valuing your privacy, but be aware these methods are usually a bit more expensive and carry other risks. Bitcoin is still volatile. Despite its long-term uptrend, 30% drops are not uncommon. This isn't a bad thing though, it just means that you need to be prepared to sit through losses or even buy dips if you still believe in it long term. And it's just an emotional thing to get your head around. Dollar cost averaging, maybe your best friend. So you can set up standing orders to consistently buy small amounts of Bitcoin over time. This smooths out the volatility and removes the stress of trying to time the market. Don't bother trying to be too clever trading. Yes, volatility offers opportunities, but it's incredibly difficult to trade. Taking a small amount of profit is one thing, but do you really want to accidentally sell the best performing asset on the planet right before it takes off? Understand what you own and just be patient. Don't get sucked in to using leverage. Leverage on trading platforms is the fastest way to turn your healthy portfolio to zero. Just a brief dip could trigger a margin call where the broker sells your entire position and you could literally lose everything. Knowledge truly is power. Holding Bitcoin really isn't easy, especially if you don't understand it. But the great thing is, the more you learn, the easier it becomes to sleep at night. In fact, for me personally, the more that I've learnt, the more obvious it's become that the real risk is holding fiat currency that can be devalued at any moment. Get a grasp on macroeconomics. So Bitcoin moves in cycles and is highly correlated to global economic data, particularly the ever-growing fiat money supply, M2, along with interest rate cycles. And getting a grasp on macroeconomics and understanding how different asset classes interact with each other is massively helpful for understanding Bitcoin's price action and cycles. Traditional Keynesian economics that they teach in universities is an absolute joke. Their jargon is complicated for a reason, to keep us confused. Economic metrics like GDP and CPI are often completely flawed, and they even teach the idea that inflation is healthy. Don't worry if you can't make complete sense of this economic jargon. In my view, they're just tools for governments to spin narratives. Study Austrian economics. This is a far more rational alternative economic theory that believes in sound money and that money should not be controlled by the state. Principles of Economics by Safety and Amuse is a great start. Start using X, formerly known as Twitter. Seriously, X is one of the most valuable resources out there for Bitcoin education, real-time insights, and signals. The community is incredibly knowledgeable and there's some great stuff out there. But obviously there is a lot of nonsense out there too, so be careful and practice your critical thinking. Bitcoin can give you true sovereignty. It's true financial independence. It cannot be confiscated or controlled by any third party. It's your money, and as long as you remember your seed phrase, no one can take it from you. That is pretty special. Ignore people who dismiss it. Typically, those who dismiss Bitcoin either don't understand it or have a direct link to a system that it threatens, like governments or traditional bankers. It's obviously fine to have thought-provoking discussions, but those who outright dismiss it just aren't worth your time. Once you truly get Bitcoin, there's no going back. It's not just about charts or the price going up. It's a fundamental shift on how you view money, economics, and even the world. From my experience, the more you learn, the deeper you go, the more unbreakable your conviction becomes. People who deep dive into Bitcoin's fundamentals almost never revert back to dismissing it. So there you have it. That's 36 things I genuinely wish I knew about Bitcoin when I first started my journey. I hope this quickfire rundown gave you some value and helped you clarify your understanding, especially if you're new to Bitcoin. Let me know down below which point resonated with you the most, and if you found the video helpful, please hit that like button. If you're not already, please subscribe for more Bitcoin and finance related content. And for a deeper dive into why I believe in Bitcoin and not crypto, check out this video on screen now. But with all that being said, take it easy and enjoy the rest of your day.